I have 5 million in SACCOs, MMF, T-bills and bonds. My workplace has become very toxic and I'm going out of my mind. My plan is to quit and focus on my side hustle. I have reserved capital for that, so I will not be touching my 5 million. Where can I invest to at least get passive income of at least 60,000 shillings a month? I want to be passive, not setting up businesses. My bond investment is giving me about 35,000 shillings monthly. Now, today's episode has been motivated by this post. Someone has 5 million and is seeking to earn passive income of 60,000 shillings monthly. She's saying, I don't want to set up a business because that is going to be active income. Already earning 35,000 shillings from bonds monthly, so needs to get an additional 25,000 shillings monthly from the portfolio of 5 million. Is it possible or not? Now, this post is what has motivated today's episode, and I'm going to run 2 videos on this. First, I would like us to discuss the types of portfolios, so that at the end of the video, I would like you to tell me what kind of a portfolio suits this poster. What's a portfolio? A portfolio is a collection of assets. It can be within the same asset class, it can be in different asset classes, but it's a collection of assets, a collection of investments that collectively achieves your investment objective. It can be within the same asset class, like it can all be stocks, so we have stocks and ETFs. It can be in different asset classes, we have stocks, bonds, properties. It is a collection of class. It's a basket of assets. What you put in this basket depends on you, on what you want to achieve, and it varies from one person to a different person, depending on your age, depending on your risk appetite, depending on the geographical location. It depends on different factors. Okay, so what are the types of portfolios that we have? In today's episode, I'm going to discuss with you 8 different types of portfolios that you can potentially have, that you can have to meet your different objectives. And I'm sure that your objective is going to fit in at least 1 or 2 of these portfolios that I'm going to share with you. So you want to stick around to the end of the video, because all these types of portfolios are important. First though, please press the subscribe button if you haven't. And to my return viewers, thank you so much for your support. Thank you also for the comments and the questions that you post in the video, because they inform my next video. At least they help me know where there's still a gap for me to cover. Our first portfolio is a conservative portfolio. A conservative portfolio is a portfolio that prioritizes preservation of capital over growth or market returns. This is a portfolio that you are not keen on improving your wealth or growing your wealth. All you need is that your capital is preserved. Now, this portfolio will be what you'll be taking if you have a big project coming up and you have a target of spending maybe 30 million. So you only want to conserve your principal. You need something that will just preserve that capital. You're not keen on growth, you're not keen on receiving income. The focus is actually capital preservation and minimize risk. You don't want to lose any amount of that money. You want it to stay intact. You're not even keen you don't care whether you're receiving payment or not. If you receive a payment, that is a bonus for you. If you're receiving some passive income, that is a bonus for you or a plus for you. But you just need to be conservative with your wealth or with that asset. So a conservative portfolio will be having a high allocation in the low risk assets. You have MMF, you have fixed deposits in banks or cash deposits in banks, you have bonds or even treasury bills, regardless of how much this portfolio is going to be paying you. Okay, it has a huge allocation in the low risk assets and a very small allocation in stocks or in equities. Another portfolio is an aggressive portfolio. An aggressive portfolio is a portfolio that seeks to maximize the return on investment. This is a portfolio that is heavy on stocks. This is a portfolio that is heavy on ETFs. It's heavy on equities. It's heavy on investments that has the potential of offering high returns. All right? This is where you have your Avocap Global Equities, your Avocap African Equity Fund, you have your Avocap the Money Fund, you have taken up shares both in Kenya and global stocks. You have, it's a portfolio that is quite aggressive. You are a risk taker. Your focus is on multiplying your wealth within the shortest time possible. These are also the guys who some trade in crypto because they have a huge appetite for risk. Their risk tolerance level is quite high. Why? Because they are seeking to grow their wealth at a very fast rate. Okay. Now, another portfolio is an income portfolio. An income portfolio is a portfolio that seeks to earn you passive income. I told you that at the end of this video, I would like you to be in a position to tell me what kind of a portfolio our poster was looking at. Now, an income portfolio is a portfolio that's seeking to earn you income from whatever sources that it has. This is where we have rental properties, we have bonds, we have rates, we have the special funds, we have the different funds that offers you passive income. An income portfolio will not be having the ETF that was recently listed in NSE. Why? Because that was a growth ETF. It doesn't pay out dividends. It reinvests whatever income that the ETF has made. So that ETF will not be fitting in an income portfolio because it does not pay the investor any income. Another kind of portfolio that we have is growth portfolio. A growth portfolio is a portfolio that it's largely in stocks, that has the potential of growth. It's a portfolio that invests in the intrinsic value of stocks. The share price is at 5 shillings now, and it has the potential of increasing to 20 shillings or to even 50 shillings in the foreseeable future. The focus here will be capital appreciation, taking up stocks that has the potential of capital gain, making capital gain, while also paying you dividends so that you reinvest your dividends and have accelerated growth. Okay. Now, the investors that take up these stocks are also risk averse. They're also able to take up higher levels of risk because stock investing, of course, is a high risk investment. Yeah. So the investors who go for this growth portfolio are investors who have the ability to take up a slightly higher level of risk, moderate to high level of risk. Okay. Now, the next type of portfolio is closely related to the growth portfolio, but it's different. This is a value portfolio. Value portfolio or value investors are investors that invest in the intrinsic value of the stocks. They look for undervalued stocks and then they take up that stock. Knowing pretty well that ceteris paribus, the stock value is certainly going to increase. All right. So that is a value portfolio. You invest in the intrinsic value of the company. The growth portfolio invests in the company that has not necessarily been undervalued now. The stock's prices have not necessarily been undervalued now, but it still has potential for growth. It pays dividends that you can reinvest, and the company has the conduct of the company, the share prices rather, has potential for growth. The value investor or the value portfolio, though, invest in undervalued stocks with potential for growth. The growth one might not necessarily be undervalued now, but it has potential for growth. Okay. Another kind of a portfolio is a defensive portfolio. A defensive portfolio is a portfolio that takes very minimal risk. It offers you growth. Remember, in the conservative portfolio, you are really not keen on the income that you are earning. Your focus was on conserving that portfolio, conserving that asset. Okay. Now, in the defensive portfolio, yes, you are earning income. Yes, you want to receive some income, but you are very keen on defending. You are taking the assets that have a very high tolerance level to market changes. Okay. If it is in stocks, you take the stocks that have stood the test of time. The stocks that even when Corona happens, their prices don't fall. Even if they are to fall, they don't fall significantly. These are assets that no matter what happens to the country or to the world, they will still be performing. A good example would be an example that is in consumables. Regardless of what happens, people have to eat. Whether there's flood, whether there's drought, whether there's COVID, people have to eat and people have to seek medication. Okay? But the aim is to protect your wealth or your assets throughout all market conditions. Now, another portfolio is a speculative portfolio. A speculative portfolio is a portfolio that speculates. It's highly on speculative purposes. You foresee KQ is down, the share prices are down, but you think that in the next government probably we are going to have a better parastatal head or a good a change in the management, and the share prices are going to increase. So you take that portfolio. You think that Umeme shares, Umeme is going to win the court case that they have right now, even though the share price is down, and they're still not clear on what their core cost of business is going to be like. But you think or you speculate they're going to have a favorable ruling, and they're going to pay out huge dividends, or the share price is going to increase. So you take that share, you buy Umeme shares now on a speculative basis, okay? A speculative portfolio works purely on speculation. Now, another kind of portfolio is a hybrid portfolio. Now, a hybrid portfolio is a portfolio that mixes up these portfolios together. You have a percentage of your assets that you use for speculation. You have a percentage of your wealth that you focus on income portfolio. You only put this amount in assets or investments that have the potential of giving you income. You have a percentage of your asset or of your wealth in a conservative or in a defensive portfolio. So a hybrid portfolio is a portfolio that offers you a mix of these other portfolios. It cures the income portfolio. It cures income. It gives you potential for growth. It preserves your wealth, and it's speculative at the same time. Now, with all this said and done, our initial post, we began with, I have 5 million in SACCOs, MMF, treasury bills, and bonds. My workplace has become very toxic and I'm going out of my mind. My plan is to quit and focus on my side hustle. I have reserved capital for that, so I will not be touching my 5 million. Where can I invest to at least get passive income of at least 60K a month? I want to be passive, not setting up business. My bond investment is giving me about 35K monthly. Do let me know in the comment section which kind of portfolio is this poster looking for. In the next video, I'm going to give you an example of how this poster can allocate this 5 million so that they're able to attain the 60,000 shillings monthly and even more if possible. So please make sure that you stay around. Do subscribe, give me a thumbs up, and click the notification bell so that when I upload the next video, YouTube will notify you. Thank you so much for staying around. Thank you so much for tuning into your home of financial freedom. My name is Belin. Let's meet on the next video.